Good afternoon. This is Brad Dennis with BIS Commodities with your weekly wrap-up for the first week of March. Starting in the livestock markets, we saw cattle come back off of highs made at the beginning of the week. April cattle specifically around that 138, 38.50 area kind of topped out. Saw a little bit of profit taking up there, and now we're down and tested that 135 level earlier today, although cattle did close a little bit higher, up about $1.20 in those Aprils, and that was due to boxes coming out a little bit firmer here today. What we have is we have the resistance that we put in place this week, that 138.5 level. And then we have multiple moving averages down at 134. So it kind of looks like we'll bounce around in those areas. If 134 gives, then you could test the lower 130 levels on those April cattle. Grains this week, firmer in corn, slightly better in beans this week. And that's all due to short covering rally coming into today. Beginning of a new month, we're seeing a little bit of money flow in here, and that money flow has taken us higher and been able to take out some technical levels to the upside. Now, granted, these were weak resistance levels, but we still were able to run some stops, and we're still seeing funds pare back their large short position. Corn got up, tested that 62 level. That gives, we'll probably see a 70 level as resistance there. Beans, surprised to see it get over 76 in the maize, but it did a firm close today. And one of the reasons being that we saw a 6% appreciation in the Brazilian real, and that caused all the South American farmers selling to kind of back off today. So with the dollar being, our dollar being lower, that wasn't the culprit. It was more that real appreciation, so you weren't getting as many reals per dollar today. And that's what kind of stopped a little bit of selling down there. Also, like I said, we saw some weak resistance levels being taken out, and that caused the rally in beans. This whole rally in the ag sector, though, could probably be blamed on wheat first taking off. People are looking at a little bit drier weather outlook for wheat. Even though it's abundant, we're seeing people pare back their positions. So when you're seeing this, you're seeing technical levels being taken out in corn, beans, and wheat. So we've got some buying back of short positions that adds fuel to the fire to the upside. Fundamentals are still heavy. Fundamentals have not changed at all. So we'll get to a point where sellers will want to be locking in a little bit on the short side. I guess you could say short covering rally was kind of the theme throughout all these markets this week. In the energies, we saw crude was up to 136 by the end of the, or $36 per barrel by the end of the day. 36.28 was its high back at the beginning of January, so we're seeing a pretty good covering out there as well. A lot of talk about freezing production levels to January's levels, and if you put it in perspective, we're still outproducing demand there, even if we just keep it to January levels. And when has OPEC ever done what they said that they would do? They always produce more. So this is a time to kind of clean out those shorts a little bit, maybe have a little bit more sideways trade in the next couple weeks. Excuse me. Going past that energy rally, that caused a little bit of a full commodity rally as well. And it also caused a lot of short covering of energy stocks today. And we saw a lot of that short squeeze in the market today as the S&P 500 went up to 2,000, as the Dow tested 17,000. So short covering rallies, quick, and they're quick, they're fast, but when you have heavy fundamentals, that'll still weigh on things, and you might get a quick blip up, but we'll probably see some fundamentals come back in. Next week, some things to look forward to. First, we're going to have the European Central Bank come out. Everybody's anticipating more cuts in rates, so the negative interest rates that they have on right now might still drop another 10 basis points next week. They're thinking about also adding 80 million buybacks on the quantitative easing side of things. So traders are getting ready for mass liquidity coming out of Europe. So if that falls short, you'll have the shorts come back in and be active players. Today we did have non-farm payrolls out of the United States government. 242,000 non-farm payrolls today. Very good number. We did see wage earnings come off a little bit. That's the concern. The other day we saw unit labor costs up, I think it was 3.7%. So you're still seeing that the economy is seeing some good numbers, but nothing that's really blowing it away, and that's why we're seeing the stock market go up, because people are still discounting that there could be a rate hike in March. That meeting coming up the 16th will be very interesting to not only see if they do anything, but hear the rhetoric coming out of there. Most people are the doves are saying, hey, we can't raise rates because of what's going on over in Asia, and the hawks are saying, hey, we might have a possibility because our own economic data is actually looking pretty good. So it's kind of a battle between, are we worried about what's at home here, or are we worried on the global market? Also next week on March 9th, we've got a supply and demand report out of the USDA. Just basically on that, we're looking to increase corn stocks from 1.873 billion to 1.909 billion, and in the beans go from 450 million up to 481 million. So we're still seeing a bigger supply out there, and that's the fundamental that's going to be heavy on things as we go down the road. So unless we get some kind of weather is going to be the issue that will trump this fundamental heaviness in our grain market right now. So that's what we need to see, and once we get closer to planting season, maybe that'll be true. We'll just have to wait and see. So that is your update for the first week of March. Broadcast over.